Okay, good evening, everybody. Just back with another weekly forecast session for the week ahead. Bearing in mind that we are running into the 4th of July tomorrow as market opens, there will not be volume in the US session because of the bank holiday for the 4th of July. So it'd be interesting to see what happens in the London session. But as with everything, TVT, we don't trade Mondays. Tuesday, Wednesday, Thursday are our active trading days. But we'll go through the charts in any case. We'll see exactly what we are looking at in terms of higher time frame top-down analysis down to the lower time frame. And I'll try and break down exactly what we're looking at in terms of how we prepare our charts for the week ahead. So the first thing that you want to try and do is just look at higher time frame movements, see where the market is trending, where the moves are, and where your areas of demand and supply also sit. Now, I did have an area marked up in here. So we can see that the market has bounced off this zone here, where demand was sitting down below, and it has tapped into lower levels of demand and left behind demand, then obviously to move off during this past week. This demand was actually respected, broken by this move here, which was then tested the week following, and has now rejected down from the week that has just closed. As we go down into the daily time frame, we can see, let's get this out of the way. We can see that demand that was created tapped into the higher time frame demand that we just spoke about. It rejected off that previous week, came back, tested, left an area of highs, and then rejected from that down into the week that has now closed. And the rejection off that was tapping back into the demand from 2 weeks ago, left behind its own demand under the lower time frame, which we can kind of look at, and it's now rejecting out of that. So our areas of supply and demand that we normally look for, we are not targeting candles, we are not targeting zones in that respect. We are looking for areas that created a move that broke structure previously. So we can see here lows were left behind here. There was supply induced here as part of this larger liquidation grab here, which kind of took lows sitting down below this point here, left an interim supply here, which then pushed down lower again to test lows down here. Took out the demand here, took out the fair value gap, then rejected out of that and then sold down deeper to then take these lows that were left behind, and then came back and retested these lows, left behind lows, rejected above, came back and then took out the lows that it kind of respected prior. So we can see obviously the market moves with liquidity. It's looking for areas of interest, and many people term that in different ways. Some people will refer to it as supply and demand, some people will refer to it as support and resistance. Some people will just use candles, some people will just use wicks. We look for specific zones that the market has respected and takes liquidity from those areas. We're not looking for candles, we're not looking for large zones. We're not placing trades as buy limits or sell limits. We're not putting large stop losses as 10, 15, 20 pips just to hope that the zone gets respected. We're looking for reaction from a specific key level and the verification that that zone is going to be respected. So as we go down from the daily, we can see exactly what's happened here on the lower time frame. The market has come back. It has respected the highs that were left behind here, did not test the supply that was left behind as part of that interim move. So clearly there's a big seller sitting up here that's holding price at this level. The market rejected down, left behind highs, rejected down again, took lows, and then tapped into demand, rejected out of the demand, came in, filled the imbalance here on the candle, rejected again, left behind highs. Again, these are all areas of interest that are getting left behind for the market to then target in the future. And we're hoping that is this coming week. So effectively, the market's left behind areas of highs, and supply above, which could be targeted with any move to the upside. Now, when we go down onto the lower time frame again, was flipped down to the 4 hour, we can then see what's happened. So we had a higher time frame demand sitting down here from the 14th of June. This was a rejection candle, indecision created, and then a bullish leg out, taking all of this structure below. So all of these poor guys got liquidated who were trying to buy out of here, buy out of here, buy out of here. They got liquidated with these moves all the way back up, left equal highs. At this point, this inefficient wick was respected. So clearly there's a sell order sitting up here that's holding price. And then the market tried to come back and retest. It was not able to retest. So we've got an institutional buyer sitting up here that pushed the price down to then buy out, liquidate all of these guys, And then there's a second entry here, again, which held price at this level, because when the market came back to retest, we can see there's no volume for buys in the market. They're getting absorbed. So price is being held at this level. So when the next move then happens, we're looking at targeting lows here. So liquidity grab occurred here. We can see the influx of volume into the market. The price was pushed down further, interim supply created, and then pushed down further again. Then it gets respected again. So we can see this move repeating again and again and again. So these are the supply zones that we're looking at to see where the market kind of created the leg outs with the trend and left behind inefficient price action. So orders are left open at this point to hold price below this level. So we tapped into demand. We left behind a lower time frame demand on the 4 hour here, which is the leg out that's now getting created. However, looking on the lower time frame again, we can see that this is supply now for these lows that got taken. And it may be relevant for the one behind. No. So these lows got taken, liquidity grab down, volume push, taps into demand. Demand then turns into an indecision candle. Market rejects out of that, breaks the bullish imbalance and pressure coming down, and continues to buy up, taps into supply. So the supply has now been tapped. However, it was very late on Friday. This is nearing close of New York session. We can see the volume just dies out completely and price is sitting below supply at the moment. So we're going to see what happens in Asia as the market opens up. It may come up, respect this supply, sell back down to then buy out of this level. But we have our areas of interest marked up. Now, when we overlay that onto our key levels, we'll see how they align or not, as the case may be. So it's going to get a bit crazy, but bear with me. Right, so we can see that in areas of interest that we've marked, we can see key levels that have actually fallen bang within those zones. So we've got a weekly POC here from a few weeks ago, which kind of sits within the supply that we identified initially. There's a bearish imbalance that sits below that, which could be a bearish imbalance that needs to get tested, mitigated, respected on the weekly POC, and then the market moves away. Again, equal highs left behind here. We can see supply that we marked up at the top. And from this move that occurred, we can see that the push on the lower time frame, which will be the 15-minute now, has left behind a weekly POC here and left behind a bearish imbalance at this point. So this is, again, a key level that we'd be looking to target with buys. Key level, again, market profile has a key level here. It's not a POC. So there is high volume at this point, which you can see that is why the supply was created. And it's been respected at the moment. We want to see how it gets respected going into market open and London. And then we've got bearish imbalances below us, which we want to see targeted for sells from this zone, possibly if it's respected. And we can kind of look for areas that we can target from this point here. We've got 30 pips, 40 pips. We've got another zone 50 pips. We've got another zone 70 pips. We've got another zone down at 100 pips. So these could all be stacked TPs or TPs that we aim for long. And we want to see how the market reacts when it gets to these points. Because when we flip down onto the lower time frame again, we can now see how relevant those points are. So again, consolidation in the market matches up with the key level on the market profile. We've got the daily POC down the bottom, which it came and tested demand and then bought out of. So a huge amount of volume went into the market here. Again, selling to buy. So getting a discount price and then moving the price against itself to liquidate all of these guys that were trying to sell down. That left behind a bullish imbalance at this point on the 1 hour. I haven't gone down to the 30 minutes because it will get a bit too messy, but we can do that on our daily review. So before market opens in Frankfurt, we want to sit down, go down onto the 30-minute and the 15-minute time frame and see where our key levels are at this point. This is a good overview for the week ahead. We want to look at targeting these areas, but we also want to see on the lower time frames where these areas possibly also could be refined. On the M30, on the M15. These are 1 hour zones that you're seeing on the chart at the moment. So we can see supply, large inefficient wick that has been tapped to some degree, hasn't been taken to 50%. So we're kind of still valid. It's being tested again. We've got equal highs left behind here. So we may be looking at some form of a liquidation of this zone, respecting of this zone to then sell down to target highs on the bullish imbalance. Market just opened, so it may do some crazy things now. But effectively, we will be looking to sell down, targeting areas of interest to then buy out of these zones to then again target areas of interest. So that is the projection for the week ahead. We'll see how things go. Monday, again, is going to be quite sketchy. London session may be okay. New York is going to be very flat because it's bank holiday. But you may see some crazy moves during this week. Projection is obviously for buys. We'd want to see buys occur because we have kind of started the trend reversal from a daily demand, and it is the low point of the chart. So as we go back onto this level, we have got larger time frame demand below us on these levels, which is COVID lows, and it does still need to get mitigated. However, we may see a bounce off the demand that was created to then move and buy up into these zones. Again, we'll see what happens and see how the market kind of fares as market continues in through to Monday, and then Tuesday open will be when we're looking to take trades. We'll see what happens over Monday and then carry out a review in the morning. Okay, hope that makes sense. As with everything, please like, comment, share, subscribe. Turn on the bell notification to be notified of video updates. Follow us on social media, both myself and the Volume Trader, and you'll get regular updates throughout the week in regards to the trades that we take, execution, analysis, and the Discord is the best way to learn on the charts, hands-on with us, analysis on a daily basis in the morning, through setup, through Frankfurt, through London, and then explaining the execution of the trades that we take during the day. Once you've gone through the course, as we said, it is best to make sure you have a very, very, very good grounding of the concepts that we're explaining in the course before you enter the mentorship. And you can enter the mentorship for 1 month, 2 months, 3 months, up to you. As quick as you can get your feet on the ground and understand the concepts, you then no longer need us. Some of you will not need us at all. So really, you could have everything that you need to form a successful trading plan and a strategy for €100, as far as we're concerned. And it's well worth the money. You make that back in 3 minutes on a trade that we have explained how to take. So it's not money for nothing. It's a very, very complex strategy, simple to execute if you follow the steps that have been shown. And I hope a lot of you are kind of seeing the benefits of now understanding the footprint charts, the imbalance, the market profile, and using these key levels that are institutional levels to trade instead of the waffle and kerfuffle that people show you in terms of buy to sell candles and sell to buy candles and demand and support and supply and resistance and all of those type of things. They're just guessing, and I'm being very honest and frank about that. No, none of those guys know what is going to happen. However, with the footprint and the tools that we have actually made you now aware of, you are able to know precisely what the market wants to do because it tells you in literal figurative format. You can see the contracts being exchanged. And I hope it has, as I said, shown you some benefit and changes to your trading strategy and understanding of the charts. Not only that, but also confidence in executions at certain levels as well. Okay, take care, trade safe, enjoy the week. And as with everything, any questions, please ask. DMs are open and we're more than happy to engage and answer questions. Bye-bye.